It's a quarter-point move for the Fed to a range of 4.75 to 5%, and a change in the statement guidance, no longer anticipating ongoing rate increases. Instead, the committee anticipates some additional policy firming may be appropriate. They drop a reference to inflation easing in favor of saying it remains elevated. There is no change in where the firming ends, a median consensus of 5.1% again for the terminal rate, and a slight lean to a hold for longer. The statement does acknowledge the recent bank issues. Quote, the U.S. banking system is sound and resilient, the statement says. Recent developments are likely to result in tighter credit conditions for households and businesses and to weigh on economic activity, hiring, and inflation. The extent of these effects is uncertain. In terms of the dot plot, 10 members saw 5.1% as a median terminal rate, with 7 above. One put it as high as 5.9%. We do learn Lael Brainerd was one of the lower ones on the dot plot. She had one of the 2 dots below 5.1%, and that's now missing. Next year, the dots see the Fed rate moving down to 4.3%. That's a little higher than the 4.1% in February. 3.1% in 2025 is unchanged from the last projection. The dot forecasts for both years are highly dispersed, meaning there isn't a lot of consensus on what's going to happen after 2023. There is no change, we should mention, in the QT process. The Fed did put out its economic projections. They see growth this year at 0.4%. That's a tick lower than in February. Unemployment is also a tick lower at 4.5%. Inflation's higher. Headline PCE of 3.3% by the end of the year, up 0.2. Core 3.6%, up 0.1. In 2024, slower growth, higher unemployment, and a big drop in inflation to 2.5%. And finally, we should note the statement was unanimous.